You were listening to chartingwealth.com for Tuesday, the 29th of August, 2017. This is the last week of August. We will end August on Thursday and go into the new month on Friday, the 1st of September. Then, of course, we're going to be off that following Labor Day on the following Monday. And the markets will start getting back to normal as we finish up, move through this summertime trading zone, and of course, very soon entering into the fall-winter trading zone, which we'll start seeing markets get a little more regular. We've been going through the summer doldrums, and we'll see how things shape up as we get into the market. Don't forget, October is the month where market crashes occur. So just be forewarned so that you are forearmed. Let's jump into what's going on with the S&P 500. It was up just barely 0.02% for the day. The Qs, the NASDAQ 100, up a little more, 0.31%. TLT, the 20-year bond fund, down just barely 0.06%. Gold way up 1.59%, the big gainer for the day. Let's jump in first with the S&P 500 as we always do. We see that we are continuing to move along as the market has trudged on down. We do see a little bit of a jump up as far as the first day of the 5-day candle. Again, pushing through and penetrating what appears to be that weekly trend line and settling right there on the 2-day trend line. However, we see that the derivative oscillator continues to heat up going down, and the MACD, or the PPO, the price percent oscillator. I always like to throw MACD in there for those of you who, when you hear the price percent oscillator, you're like, what is that? We have a great teaching at the website, chartingwealth.com, on the price percent oscillator, explaining the difference between the PPO and the MACD. The reason we like the MACD better is we can use it for comparisons, and it also tracks better over time the way that it's calculated. So please read about it, study it, we use it. So we see that the market is again trying to, as far as price goes, go up a little bit, but the derivative oscillator and the price percent oscillator continuing to go down on that weekly chart. As we delve into things, we can see the derivative oscillator is not going down with the same energy it had been since the 23rd, where it bottomed out. It is moving up some, again, has penetrated the 2-day trend line and appears to be sitting right there on the weekly on the 2-day chart. And again, still going down, though, price percent oscillator still heading down. Let's quickly look at the 4-hour chart. What is it doing? You can see all the way from the afternoon of the 22nd Tuesday, we have had it sliding sideways, sideways, sideways. We had a vertical crossover in the morning on the 4-hour chart, but it's really just been sliding sideways. Price has not closed at all above where it originally hit on the afternoon of the 22nd. It has stayed below that. And again, it is just sliding sideways on us. We'll continue to watch. Remember, all things being equal, the charts tend to move in the direction of the largest chart. That is the weekly. That is down. Let's continue to watch again. If you see the 4-hour rotate over going down, might be a good idea to get into it. Why? Because the weekly and the 2-day are down. So when you see a rotation over on the 4-hour chart, those of you who like to use the 2-hour chart, looks like it's getting close there also. So keep an eye. You may have a jumping in point over the course of the next day or so. Moving along, the Qs, it was up more than the NASDAQ. The NASDAQ 100, which is the Qs, was up more than the S&P 500, up 0.31%. Again, still moving down. The derivative oscillator is negative. Price percent oscillator is negative, has been since all the way back on when the weekly vertical crossover occurred back on the 16th of July. It went down for a few weeks, then up for a few weeks, then back down again, offering another opportunity to hop in. Let's look at what's going on the 2-day chart. Again, sliding sideways for the last several days, still going down. and derivative oscillator still in the negative. What does a 4-hour chart show us? Well, it again, sliding back and forth as we've seen it track sideways since it hit its high back on, just like the S&P 500 hit its high back on Tuesday the 22nd of August, and it's been sliding sideways. Hasn't penetrated the 2-day chart on the 4-hour nor the weekly. It has crossed back over going up. Keep an eye on it. If it crosses over going down on that 4-hour chart, or if you're a 2-hour chart person, keep your eye on that too. Might give you an opportunity to jump in on a down trade. And again, down trades are where you jump into inverse ETFs that move in the opposite direction of the ETFs that we're following. How do you find those? Well, you can go to, and I very much encourage you again, go to our website, chartingwealth.com, go to the training, Inverse ETFs, how to make money when markets crash. You need to know how it works, and we explain it to you in detail. Okay, let's keep moving along. Next, we are going to the 20-year bond fund. It was the only one that was down for the day, down just a little bit, 0.06%, 0.6%. So not down very much. We see over the last several weeks continuing to move up. As we watch what's going on, we can continue to see the going into the 4th week of up movements on our Heiken Ashi candlesticks. We're in a confirmed up move. That goes all the way back to early February on the weekly chart. On the 2-day chart, we had the 2-day vertical crossover back on the 9th of August. Lots of nice, strong up movement. The first day of the latest 2-day candle is a red open box. Again, we'll continue to watch and see how that finishes off. Derivative oscillator still in the positive, and the PPO still in the positive. Let's keep an eye on what's going on that 4-hour chart. It, of course, crossed over going down in the morning, so keep an eye there. If you've been in an up move, riding it up on the chart, don't hesitate to go ahead and take some profit. You do not wish to lose it. Watch the charts about 10:30 in the morning if you are still in. See how things look. And if we do see a switch back over and a nice up move, then of course you would want to stay in and continue to ride that profit. If it does look like the 4-hour chart is going to be a long-termer, as it has been since it rotated back over all the way back on the 17th, you may very well wish to take your profit and remove yourself from that trade. Gold up the biggest of anything for the day, 1.59%. Gold has been rocketing up since it hit its bottom. We're somewhere around the weeks ending in about mid-July. And we've seen gold rocketing up since then. Again, another big day for gold. We can tell on that weekly chart it's actually kinked, hockey sticked, going even higher on the price percent oscillator, and the derivative oscillator has grown even more. Now let's look at the 2-day chart, see what we see. 2-day chart, again, crossed over. We had the 2-day crossover on Monday, the 24th of July, continuing to move up, started the week off with a bang. And of course, let's see what's going on that 4-hour chart, which has gotten a little squirrely lately. Rotated over, going down, sort of slid sideways and laminated. Didn't stay down very long, popped in the afternoon, and has continued to rise. So again, we're coming out of the summer doldrums. We are waiting to get into that fall-winter trading zone and see how things go. If they go the way gold is going right now and the way that TLT is going, the 20-year bonds, as long as gold and bonds go up, they're typically inversely related to the stock market. We can expect the market to continue to track down. So pay attention. The reason we chart the 4 ETFs that we chart, the 2 stock indexes and 20-year bonds and gold, is we always want to have something to trade, and we want our charts to complement each other, even if they're inverses. So that's what we try to look for. That's where we are, folks, at the end of the day on Monday as we go into Tuesday, the 29th of August. Thank you so much for being with us. You have questions, problems, concerns, let us hear from you. God bless. All the best from the whole team here at Charting Wealth. chartingwealth.com.